Let's get more on this optimism today about a rate cut. We're joined by Michael Dehal. He's Senior Portfolio Manager at Dehal Investment Partners at Raymond James. Thanks very much.
Thank you, Andrew.
So it looks as though it was a dovish message from Jay Powell today.
Absolutely, right. I think markets got caught by surprise with Jay Powell's comments, being more dovish than hawkish, right? So, and he focused more on the labor market than on the price stability.
And you were among the observers who thought we might get a hawkish tone from Powell.
Absolutely, right. We thought with a recent uptick in core CPI numbers in the U.S., we thought he would be more hawkish than dovish, but he did open the door to a September rate cut.
And people there moving into U.S. government bonds, they tend to do that when they're less worried about inflation.
Absolutely. And that's what we see the bond reaction. The 10-year yield has come down quite significantly this morning, and obviously volatility has decreased, and equity markets have shot up this morning.
Isn't it interesting? Our stock market hitting record highs despite the tariff pressure.
Absolutely, right. It's more of a tailwind from the U.S. markets. That's why our TSX is hitting record highs. If you look at the Canadian economy, we are pretty weak. We had 41,000 jobs lost in the month of July. CPI is starting to creep up in Canada as well, right? So there are concerns and cracks to our Canadian economy, but it is pretty remarkable to see our stock market hit record highs today. There's
a story, I mean, not to distract us too much, but the story from Brian Platt of Bloomberg right now, that Canada is set to remove its retaliatory tariffs on a long list of U.S. products as an olive branch to Trump.
Yeah, and that'll be definitely a tailwind, right? I think Carney and Trump are trying to come up with some sort of mutual agreement on the tariff front, and they'll help both economies, right? Obviously, Canada and the U.S. are strong trading partners. Most of our exports do go to the U.S., right? So lifting that would definitely be a big help to our Canadian economy.
Could we look at a couple of tech stocks that you do like the look of? Salesforce, they are seen as potentially a big winner in incorporating AI across their services.
Absolutely. They're incorporating AI in their enterprise software solutions across the board, right? They are seeing good, strong, solid growth amongst their customer base. So we do see Salesforce as a great entry point in the software space.
There's a story in the BBC about computer science grads can't get jobs, apparently, because AI is taking over a lot of the programming.
Yeah, and that is a concern, right? Is AI going to take over some of our jobs globally? So that is something that people are concerned about in the labor force. Is AI going to replace people and humans, right? So it's something that we got to be mindful of and watch out for the future.
And to rub salt in the wound, some of these grads say, well, we have to fill out these long application questionnaires that we know are going to be looked at by AI.
Yeah, exactly. But I do think AI is here to stay. It is definitely transforming the way we work, we view things, and how we do research, right? So.
Oracle, a long-standing tech stock, been around for decades. You see this as offering potential
Absolutely.
as well?
With their cloud business and their integration with AI in their cloud business, definitely we could see more tailwinds coming in the near term as well. And they do have a strong financial position as well.
Here's a stock that I hadn't heard of, Senora. I hope I have the pronunciation right. They're a pharma distributor in the United States.
Yeah, they distribute pharmaceutical drugs and medical equipment across the U.S., across the globe as well. They raised their full year 2025 year guidance on EPS to 15 to 16% growth. They have a strong financial position, $2 to $3 billion of free cash flow, and they are committed to stock buybacks. They're buying over $1 billion of their stock each year, so they definitely do have a strong financial backing as well as a strong growth prospect as well.
If clients come to you and say, why have you got me in Eli Lilly because of the weight loss and diabetes drugs? I mean, Lilly off its highs, LLY.
Yeah, and we see that as a great entry point. The GLP drugs are definitely in demand. So Eli Lilly, Novo Nordisk are two the winners in terms of the GLP-1 drugs. We think with the softness of Eli Lilly, it's a great entry point for long-term investors.
You think that, I mean, obviously it's only early days, but Some people, of course, have had side effects with these drugs. Any drug, you're going to have that.
Any drug, you're going to have early side effects, right? But I do think we're in early stages, and there is time for it to, work through those side effects.
And Costco, a favorite among investors. Not my favorite place. It's too crowded. That's all. Nothing wrong with the products. I just can't stand the multitudes.
It's too crowded, and people tend to overspend at Costco. I know myself, every time I go there, I end up spending $300 or $400 every time I go.
You think, oh, that's a bargain. That's a bargain.
Yeah, exactly. But they have a great moat. They're increasing their sales growth. They're opening up 25 to 30 new club stores every year. Strong membership growth, reoccurring revenue with their membership renewals. Over 92% in Canada and the US members are renewing their memberships, right? And they're mitigating some of the tariff concerns by sourcing locally, rerouting some of the goods that they've gotten overseas and stuff, right? So they definitely have a strong financial position and doing the right things.
And it's interesting the way they sometimes have just one product. They won't have a multitude of choices. I know that's not an original observation, but do we need 50 types of toothpaste?
Yeah, exactly. And now they even get into some of the hot food sections, right? I know a store up in northern Toronto. They're opening up a sushi bar.
Right.
Yeah. So they're definitely increasing their offerings and all that.
Michael, we better jump. Thank you very much indeed.
Thank you.
Michael Dehal, Senior Portfolio Manager at Dehal Investment Partners with Raymond James.